Hi traders and welcome to the Technical Analysis Market Watch on Friday the 22nd of November. So I've seen some really good moves this week off some very key levels on the indices and some of the currencies. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that we've got a bit of a bounce off from where we were last week off that 64.50 level. No real surprise there because we know it's a pretty strong zone, and we've been able to pop up and see a bit of a test of this previous resistance here at around that sort of 65.50 or almost a 65.50 area. Didn't quite reach the 20 moving average because obviously price came down at the rate of knots from this level here, but what it has done is it's found itself back at that base of around 65 cents. So now really the very important zone becomes the 65 cent mark because it's a bit of a do or die level for it. If it breaks through and continues down, it makes for a pretty easy trade down to around that sort of 64.50. So if we get a daily close below this level, we'd be looking at those previous lows again and then maybe a push down even lower again. But if we do get a little bit of a rebound from here, I'd be looking out for a series of higher highs and higher lows on a smaller time frame. Because if we do get a little bit of a rebound from here and we break to a new high above 65.50, although the moving average is there, it'll probably be around that level by then. So once we get past this zone, if we do get above it, it really opens itself up for a move back up to around that sort of 66.20. So it's not bad. It's not a bad area for it to be in because I think it's a do or die time for it. It'll either find support at this level and push up higher, which gives us a really good base to actually get back up to around that 66, or it'll fail at this point, break down lower, and then push and put pressure on the 64.50 again. And if it does that, I think this time it might actually break it down and we might see lows of around that sort of 63 cent mark. So pretty good trading on the Aussie USD, but a very, very important zone. It's done exactly what it needed to do, but right now is the key zone for it. All right, we'll move over to the US dollar CAD. And this one did reach a 20 moving average, as you can see. Yeah, a bit of a sell-off throughout the week. Look, realistically, yeah, it reached a very decent high very, very quickly off a good bounce off the 20. It's pulled back and done all the right things, came back down to the 20 moving average and that roll reversal zone, which is just as important. As you can see, you know, we've had that high hit before at around that sort of 139.40 area. So we knew that it was a key zone anyway. It hit it and bounced off it very, very quickly. And I think that's the important part. Look, the best way to treat something like this, you know, a moving average is there, you know, it's coming down at the rate of knots. And look, this daily candle would have looked very, very different an hour or probably a few hours ago now. So, yeah, at some point throughout this trading session, this was a big red candle. So the best way to really look at that if you are trading it intraday is you pop your line at around the 20 moving average and that roll reversal zone, which you know is an important zone. Then you go to the smaller time frames. Okay, and once you know that that zone has been touched and you get a rebound off it, then you're looking at that trading opportunity. And you can see here, it hit it and reversed pretty quickly. Once it got back into this sideways zone, it's giving us a pretty good indication that it actually does want to turn around and push up. Now we're getting a series of higher highs and higher lows. We're about to get a 20-50 moving average cross on the 15. So once this zone gets broken, if we get past all of this noise here on the 15-minute chart and we get that higher high, higher low continuation, then we're looking at a pretty reasonable move back up to around that 140. We know that the momentum is shifted. So we see the momentum shift from that zone. Now we've got the higher high, higher low sequence. We just need to clear this area here of resistance. And once it's done that, then we're looking back at moves that could potentially get it back to around that sort of 140, 140.50 area, which is around this zone here. So good rebound zone, but one certainly to keep an eye on. It's done all the right things so far. We just need a continuation of the higher high, higher low sequence on the smaller time frames, and we should be hopefully off and running. If it turns around and breaks the 20 moving average and that resistance, that's a very different story, and we'd be looking at that with a very different lens at that point. All right, over to the US dollar yen. A bit of a mixed week, really. It's been a little bit sideways, but look, it did come down, touch that very important zone and all important 20 moving average. As you can see, that 153.50 is a very important area for it. It's done really nothing in the last couple of days. Both candles have really negated each other, but what we do have to be mindful of here is that it's not making a lower high, because we've obviously had a sequence of higher highs and higher lows all the way through. It's been a very, very big trend going all the way back from 138 and all the way to 156, which is obviously an extraordinarily big move. But now, yeah, we have to make sure that this actually isn't a lower high. So we want to be very, very careful, because if we get this zone broken, if we get a daily close, say below 153, what that's giving us the signal of is the momentum shift has happened on the bigger time frame, which could lead to, further weakness back down to potentially 149. So really, the high is here. We can see that it's obviously lower than the previous one, the first time in a long time. If it gets up and gets cracking and makes a higher high above 156.50, then we're all clear to push on, and probably 160 will be the next target. So we've got no problem there. The continuation of the trend is intact. But if it fails at this point here, and we get a close below 153.50 on the daily, then that's going to give us a sequence of lower highs and lower lows on the daily for the first time since 138. And that's a significant change in trend of what's been extraordinarily big. So then 149 could be back on the target. So very important zone for this as well. But at the moment, it's hanging tough. So really, if I was scalping this, I'd be looking for moves to the 153.50 or the 156.30-ish area. Clasp that zone and look for scalping opportunities, high or low. Just trade the smaller moving average, or just at smaller time frames. Really, the higher high, higher low sequences on the smaller time frames, whichever way they're going. Just aim for those boundaries. All right, over to the dollar index. This has been a power of strength again. You can see that we've done all the right things. It pulled back to a level that we know is strong. We can see here we've got the resistance at that point. We know we've got resistance there as well, so no real surprises there. It's pulled back and done the right thing, which it had to do, because we don't want something that's out of control and just running. So it was able to pull back to that level and then bounce off it very aggressively. And again, look, if you go to the smaller time frames, you're going to get all of those signals off that. Once you've got this, you knew this level was here already, right? From the previous analysis that we did on the daily chart. So once we know that that level is there and it's intact, once the 15-minute gets down there, once we've got a series of higher highs and higher lows, we're off. And it's pretty much done that. You can go to any time frame and you're probably going to see it. The 1 hour is not going to be a hell of a lot different. There was a bit of a gap in there, but you can see that once the sequences of higher highs and higher lows get going, the things we talk about all the time, pullbacks to the 20 moving average, off it went. So really, really good trading on the dollar index. Looks to me like it wants to break higher again, which is quite incredible, really. There is very heavy resistance here at just above the 107, okay? So just be mindful of that. This brought about its undoing last time. It's testing it again, but this wave, I'm not so sure it is finished. So we're going to watch it with a great deal of care over the next week, because realistically, there's not a lot. If it gets past that 107, I mean, it really is open slather from there. It could really push on hard. And then we're looking at probably 109 as the next target, which is around this resistance here. So it's quite a bit of room to move for it, but this is a very strong zone, and it's right there right now. You can see a very heavy resistance there. So just be mindful of that. If we get past that though, it's going to spell a very big sell-off on the euro, which we'll go to now. Look, it broke the key zone, obviously. We know that, there was heavy support at 105.50. It's broken down through that. No real surprise, obviously, because it's the inverse of the dollar index, pretty much. Where it goes to from here, look, there is support here. There's no question about that. You can see very heavy support. That's going to be in line with the dollar index resistance, obviously. Very, very important support here. It needs to hold if the euro is going to have any life left in it. If we get a break past this level, if we get a daily close below the 104.50, this is in serious trouble at that point. And, we're probably looking at moves back down to that 103 level, which is the next real target for it. So a decent move is potentially possible if we get a daily close below that 104.50. So certainly look out for that. All indications at this stage, we'll probably say that it's probably going to be weaker than it is going to be stronger. But again, the daily close is the important one. Just be mindful that there's very, very heavy support here at 104.50. Okay, so I'll pop a line there. We'll keep an eye on it. That's the level of very heavy support. If that gets broken for daily, we're looking at maybe 150 pips from there. That's what we'd be looking for. So series of lower highs and lower lows are what we would be targeting there. If we get a reversal from this point onwards, then 105.40 would be the first target in the scalping mode. But I wouldn't be going long on this. I'd be countering very, very carefully on it, because this is an extraordinarily aggressive trend heading down. So just be careful of that. And the S&P 500, look, done all the things it needed to do, came back, hit the 20 moving average and the roll reversal at the start of the week. It's been fighting all week to go higher. You can see that the big wicks on the previous two candles have all finished very, very positive at the end of the session. So they've tried to sell it off. It's failed every time, and strength has prevailed. And it's pushing higher now at nearly at 59.50 really is where it's at. Look, the initial targets for me in the next session, I'd be looking for moves up to the 6,000. If we see a series of higher highs and higher lows on the smaller time frame, I'd be going up to about 6,000 as my target. No need to get too ambitious. Let it break through there before we start getting higher than that. More importantly, I think that the strength is there all week. So really, as long as it's holding above the 20 moving average, I'm not really interested in shorting the S&P. So I think we use that as our advantage and look for moves up. Probably try to avoid shorting, even counter trending this one until it actually does turn around and go weak, because it has been very, very strong. All right, so I hope everyone's had a great week's trading. We've seen some good opportunities again. A lot of these are at very key levels that are going to be very, very interesting next week. So we'll see how they go. Keep your stop losses relatively tight while we are at these key zones. And hopefully you'll be able to get some good pips. This has been a pretty good week for trading, so hopefully you're able to take advantage of some of that. Have a fantastic weekend, and I look forward to seeing you all next week.